Hey, hello everyone. Thanks for the wait and thanks for joining us on this lovely Saturday evening. Super. So on this webinar, we'll kind of be talking about wealth creation with you Middle East NRIs in place, where you're from UAE, you're from Dubai, you're from Saudi, you're from the Middle East region. What works for you and how a structured product kind of answers all of your questions. So we'll kind of looking at what the product does for you, what are usually the common pitfalls that the people face, as well as how we kind of plan to address it throughout the webinar. We'll also have a Q&A session at the end also for you guys to kind of take part in. So moving on. I just want you guys to take a look at this graph even before we start on the presentation. You guys can zoom in, you guys can take a screenshot. So this is how equity markets as a whole have performed over the last 25-30 years. If you look at it, it has been one upward trend. But is that really been an upward trend? If you look at it, the Lehman Brothers kind of thing on the 2008, there is a very big kind of crash in place. If fast forward, COVID also has a very big kind of crash in place. Ongoing Hamas-Israel conflict, there is a crash in place. Even bigger crash has happened because of Trump tariffs was. Russia-Ukraine war has again resulted in markets going down. But wherever markets have gone down, you can see they've come back with an even bigger. So our kind of thing is to kind of help people, be accustomed to this volatility. Not only accept it, but take it as a friend and make people participate in during these times. That is where NIO and that is where I thought as a philosophy comes in, where whatever product you pick, even if you are going to go for the mutual fund, participating in this volatility, make sure that not only future returns are better, but also make sure that when markets fall, you stay invested in and you add more capital. So this is a feature of the market. This is how markets work. As long as we accept this and we are fine-tuned to this, I think investing as a journey can be even smoother than what investors experience. Now, moving on. I deal with a lot of NRIs within ithought. So usually what I see is there's a lot of uncoordinated assets, meaning you have FDs, you have some insurance policies like money back or endowment that has been sold to you by your relationship manager in one of the insurance companies. There is some real estate sitting somewhere, even though you are abroad, and some arbitrary stock portfolio where I've seen people have 50, 60 lakhs, but it is in some 50 or 100 positions where the portfolio has not done anything. And the investor keeps adding money into them. So you see there's a lack of unified strategy. No goal is fixed to any asset. So the goal is that maybe retirement in 10 years or retirement in 5 years or maybe your kids' education, but your assets are all in place. So even though you guys are making good money, even though that money is tax-free, it has to be channeled to each asset class very particularly so that these can grow over time. So that is where we kind of step in to kind of help you, give you a personalized financial plan. Based on that financial plan, we do the execution based on whether NIO works, or maybe mutual funds work, or maybe a PMS product works, or maybe a combination of these things work. And adding to this distance and complexity kind of make it effectively harder to manage your Indian investments because you're sitting there, you have a family, you have work that is ongoing. So trusting it to a professional is where, your investments do need that time, your investments do need that effort. So giving it to a professional will make sure that that is there in place. Finally, missed opportunities. If a lot of your money sitting in NREFTs or property, you may be missing India's next leg of growth story where stock markets have performed really well for the next 10 years with India's journey kind of poised to do even better over the next decade. So these are some of the problems that we kind of want to address with the financial plan, or we kind of address with communication with the investor so that once these are in place, then the assets can be put to good use for each goal. Moving on, let's look at a fundamental shift in strategy. So what has been usually the traditional approach? Investing in single assets like FTs, properties, insurance policies, high concentration, one or two assets. These are things where they don't even beat inflation over the long period, so that when people come back for retirement or they want to move abroad for retirement, they don't have enough money. Difficulty in rebalancing. If a lot of your allocation is going to be in real estate, now is the time to make sure that you kind of rebalance it into more liquid asset classes so that in the future, these assets start working for you. You start to generate an income. So these are usually the common pitfalls. Now, what is the approach? Having a single diversified approach has a very, very good potential in place. So for example, within NIO, our PMS product, we do kind of professional data-driven management of each asset class. So today equities might be in favor for me. Tomorrow precious metals might be in favor. Tomorrow I can even go global if I want. So kind of a portfolio that is dynamic in nature, that can go 0 to 100% in each asset class as required, while being absolutely liquid is where your money should be. A portfolio where all parts kind of work in harmony for you, so that wherever there is an kind of an opportunity for you, this goes there. Now, moving on. What is the solution that I'm talking about? The solution is obviously to have your investments in a multi-asset portfolio. See, the goal of multi-asset investing is not just to maximize your returns, but also to provide a more smoother risk-adjusted portfolio. See, if you're someone who has a family goal in mind, meaning I give ithought or NIO my money, compound it for the next 10 years, make sure that my money does well, but I'm not worried too much about rebalancing. For the investors like that, NIO is the perfect product because you have all of your assets classes in one place. If I need to go to equities, I'll go. If I need to go to buy debt, I'll buy it. If I need to buy gold, silver, I'll buy it. If I need to go international, NIO gives me the option to do that. So in short, I'm not putting all of your eggs in one basket. I'm letting them being managed professionally in a data-driven manner, only in an asset class where I found value. So for example, now we think precious metals are quite expensive. So we'll come out of it to allocate more towards maybe parts of Indian equity market where we see value, or towards debt markets where we see even better value. So it is kind of going to be an ongoing journey. It is not a put and shut kind of a case. NIO will be dynamic. NIO will adapt according to the market. And that is what your portfolio needs. That is what NIO offers through multi-asset investing. So what are the advantages of this all-weather portfolio? See, in terms of growth, NIO can maybe go 70-80% in equity or even 100% in equity if required. Equity is the engine that is going to capture the market upside. And if we feel markets are undervalued and we can allocate a substantial portion towards them, NIO will shift towards more equity to build long-term wealth. In terms of downturn or in terms of market valuation euphoria, debt provides a good stable cushion. NIO can take this through the option of ETFs that are available in the market. And going forward, you're going to only get more ETFs that are going to come into the market. So the option for NIO is only going to expand and grow. In terms of inflation, we can go again pick precious metals through the form of ETFs, gold, silver, all of these are available for us. If we think global opportunities are available more cheaply, global opportunities maybe provide us a more better option to kind of invest, we can take this through the ETF also. Maybe US, maybe China, whatever market is available, whatever market valuation wise is conducive for us to invest in, NIO can go. So I'm putting all of your asset classes in bucket, but all of your asset classes will not be part of the bucket at the same time. It may be, but usually what we've seen is that one or two asset classes are there. Once one of these plays out, we take that and we move it to another asset class. So you are constantly making sure that your portfolio is structured well as it is dynamic in nature. So the all-weather portfolio for a financial goal like retirement in the next 5-10 years will make sure that not only is the capital growing, but the capital is growing with even lesser risk than a full equity portfolio. Isn't that what we all want? Going forward, I'll be passing this on to my colleague Ram, who will be explaining a bit more about the intricacies of NIO, why it is built for you. We built NIO with the NRI in mind. So he'll be talking a lot more about why NIO for NRIs especially, and how this product can kind of help you in your financial journey.
Yes, thanks, Nakul, for a good introduction about the multi-asset strategy and NIO. So yes, in the same way, I'll also talk a little bit about the multi-asset strategy and how NIO is made specifically for NRIs. So now we have understood how the multi-asset NIO strategy works. So now let's talk about why it's built specifically for you as an NRI investor. See, because as an NRA, your financial needs are more unique. You live in one currency, earn in another, and invest across geographical kind of different countries, right? So NIO has kept this in mind so that we make this global lifestyle and making this global opportunity in the mind, where it's not like a do-it-yourself product. It's a professionally managed portfolio that takes the day-to-day stress off by investing off your shoulder, I would say. So our portfolio managers handle the research, the rebalancing, and the risk management, all within a disciplined framework. Okay, now you see, as an NRA, you don't have the time to track multiple Indian or like some macro updates like RB and so. But with NEO, that's taken care for you. You get the benefit of the professional research team constantly working to ensure that your money stands optimized and allocated no matter how the market moves. See, many NRIs investors face this common problem. Their investments are scattered, as what Nakul said earlier. A bit of mutual funds, here's some in real estate, some in property, some in fixed deposits, some in NRI deposits. The results, it's hard to get a complete picture of your wealth. So NEO simplifies that for you. You don't need to judge a kind of a five different account, or you no need to have a kind of different product. One PMS, one login, where you get everything in a diversified manner, I would say. So, NEO is not a purely India-only portfolio. That's one of the biggest advantage, I would say. It's a global-minded investment solution that combines the best things. Like you see, we invest in Indian equities, tapping into India's long-term growth story, and we invest to global also through ETF float, where we give you exposure to you the world's best companies, best sectors. There are US companies, there are Chinese companies where you can't find such kind of diversification in India. So we also include precious metals and debt. All this will go through the ETF route, I would say. So your portfolio is automatically balanced through domestic opportunity with global safety. A strength that matches your own international lifestyle as your NRI, right? So finally, transparency. We understand that as an NRI, you want to access clarity from anywhere in the world. That's when US build a kind of a more comfortable way, I would say. So our relationship managers will be always in touch with you. You will be getting a monthly updates on what's happening to your portfolio. You can see what's going on, how the fund manager is making every decision. So monthly, you can know what's happening in the layer of your investment, I would say. So it's just not about only returns. It's more about confidence, I would say. So knowing your portfolio is working efficiently or not, while you focus on your career, family, and your life in abroad, right? So in short, NEO is built for NRS who want a globally diversified, professionally managed, and kind of a digitally streamlined investment experience, I would say. So it's not just about investment product, it's a complete wealth management ecosystem built for your global life powered by Indian expertise. Okay, so now we have understood why NEO is built for NRA. So now let's look kind of a deeper into how NEO works, specifically what asset classes contribute to your portfolio. See, because every asset has a kind of purpose. Some help you to grow, some protect, and others stabilize your wealth. NEO brings all of them together in one portfolio. So first, we can start with domestic equities. This is the growth engine of your portfolio, I would say, where wealth creation is truly happening there. Through carefully selected Indian equities, NEO captures the Indian growth story. See, one that's driven by kind of a more demographic, digital transformation, and economic expansion, I would say. So, equities deliver the long-term compounding power that helps your portfolio to outpace inflation and build real wealth. So, that's where the portfolio's growth foundation lies. So next we have the foreign equities. As an NRI, you already understand the importance of global exposure, right? Your life is global and your portfolio should be global too. Foreign equities provide good geographical diversification, helps you to reduce concentration risk in any one country. So with NEO, part of your portfolio is allocated through global ETFs, giving you access to world leaders in technology, healthcare, innovation. So this balance between India and international equities ensure that wealth grows across economies, not just in one market. So now every asset is about growth, but some are also about stability. So for stability, you can take this long-term debt. This asset brings predictable income and yield enhancement. So specifically important when you want steady compounding without an equity level risk. Through the high quality debt ETFs and debt products, NEO adds this layer to generate consistent returns while maintaining the portfolio balance. Yes, then the next is moving to precious metal. We can talk about gold. So gold has historically been a reliable store of value, especially during inflationary or a more uncertain time. As you can see right now, the gold rally of more than $4,000 and so. For an NRI investor, it acts as a counterbalance to equities, I would say. When markets fall, gold often holds or even rises in value. what we saw right now. When the equity market for the last 1.5 years is stagnant, so gold, which has done significantly well, I would say. So not only gold, silver also has done a good job. So including this precious metal, see, helps you to preserve your purchasing power globally. So yes, silver even acts as a commodity. It's a tactical element in your portfolio that delivers cyclical returns. When global demand surges, commodities like even energy, metals tend to perform strongly. So having a small exposure to this asset class helps you to capture a short to medium term opportunity that often missed in traditional approach portfolios. So based on time, when to go, based on this everything, particular portfolio will be kind of rebalanced and will be created. So when you look at NIO, you are not seeing a single asset or a market bet. You are seeing a well thought ecosystem. Domestic and global equities drive growth, debt builds stability, and metal plus commodities add protection to your opportunity. Right. This is true diversification, how it looks like. Every asset plays its role, every piece contributes to a portfolio designed for smart and steady wealth creation. So far, we are seeing that each asset class brings to the table, like equity for growth, stability, which is given through debt, and gold and silver for protection and opportunity. So now let's talk of if one step further, in uncertain times, most investors focus on worries. See, inflation is going up, something interest rates, global slowdown. But with newest multi-asset approach, we don't just survive volatility. We actually turn worries into opportunities. Now let's see how. When markets are volatile or consolidating, many investors hesitate to enter equities. But in India, this corrections always have created a kind of a good long-term opportunity. Okay, when you see particularly domestic equities continue to benefit from structural growth. Young population in India has, of course, rising consumption. When you see this rate cut in GST, rate cut in income tax, and repo rate cut through RBI, this everything increases consumption. Where even the government-led capex cycle that also is playing an important role. So this market participation is also broadening, not just in any particular cap. I would say it's been developing throughout all the ladders. So NEO leverages this by maintaining a disciplined exposure to Indian equities, using volatile to accumulate value rather than fear it. Okay. So while Indian markets consolidate, the global market often move differently. I think you can know how US is hitting all-time high. You can see how the Chinese market is performing. You can see how the other Asian or emerging countries markets are performing. So there where the foreign equities become key kind of diversified, I would say. For instance, you see US tech sector or this green energy kind of renewable stuff which you are seeing in Europe or the healthcare, this semiconductor and so, they present high value opportunities that Indian investors often can't directly access. I think you can understand that. So NEO's global allocation ensures that your portfolio benefit from these opportunities, capture growth in developed market even when the domestic market take a breath. So in today's interest rate environment, you all know that long-term kind of debt where the central banks begin cutting interest rate, long duration bonds benefit from this mark to market gains. So having a good exposure towards this debt market, meaning their value appreciates as yield falls. I think you know the maths by the way. So Neo's allocation model captures this by dynamically increasing the long-term debt exposure also. When the macro setups turns favorable, it's a classical example of turning a macro worry into a high interest rate into a wealthy opportunity, I would say. So of course, gold and this precious metals like silver thrive on uncertain times, whether it's a global tension, interest, inflation, rate cut, anything. It acts as a natural hedge. We have seen a kind of yeah, I think you can see that the gold which hits new all-time high in the recent time during this uncertain market. So new includes such gold ETFs, ensure portfolio benefit from global uncertainty instead of hurting by it. It's like a kind of insurance layer, I would say. One which pays off when the world panics, I would say. So exposure towards kind of other asset classes like precious metals and particularly silver and so because they have a good kind of industrial value at the same time as a store of value. Yes, now that we have seen how the NEO turns market volatility into an opportunity, let's talk about the kind of engine that drives it all, NEO's investment framework. This is what ensures that every allocation, every move, and every decision is in your portfolio is backed by structured and strategy. One of the NIO's biggest strength is flexibility. We have no cap on any asset class. Yes, that means we are not restricted by any right kind of rigid limits. If equities offer better opportunity, we increase allocation towards equity in a kind of significant manner. If gold did well, we'll increase to gold. If debt did well, we'll increase to debt. So we can leave those where this flexibility helps NIO to stay ahead of market cycles, adapting not only reacting. That's what you need to understand. Then our research process blend top-down and bottom-up approach. The top-down lens where you can see that which helps to understand the macro trends like interest, inflation, global market flows. So which decide how much to allocate across different asset class. Then when we see this bottom-up approach, which focus on selective quality opportunities, like within those assets, like companies which demonstrate strength, leadership, or growth potential. So together, they ensure decision are data-driven, not emotion-driven. And finally, the concentration where it counts is NIO doesn't scatter across hundreds of holdings. Instead, we are more like focused on something for a long trend and market leader without with kind of a theme base, we would say. So we only go through market leadership where like our portfolio prefers companies that consistently outperform in their categories, giving a quality exposure with conviction. So NIO's goal is simple: to help investors to grow smart and grow strong, no matter what the market looks like. Whether inflation rise, growth is slow, or rates fluctuate, there are always an opportunity hidden inside every economic condition. When inflation and interest rate rise, NIO tilts towards fixed income and benefits from higher yields. In high growth environment like equity outperform, and our research driven approach capture the upside through the quality stocks what we select. And when the growth slows, dynamic multi-asset strategy where shifting allocation intelligently, we shift intelligently to preserve and grow your wealth. That also we take care. So that's the power of this balance and structure. NIO builds versatile portfolios that don't just survive market cycle, but truly prosper in all markets. So see, as we come towards the end of the session, so let's discuss on what kind of years of market data and investing experience have taught us. See, the lessons that form the very foundation of NIO's multi-asset philosophies. There have been 0 years in the last decade and of where everything failed. Even when equity markets struggled, debt, gold, or this global assets delivered positive returns. This is the essence of multi-asset investing. Something is always working for you. That's why diversification isn't just a theory, it's a real world risk shield that protects wealth in uncertain times. See, in fact, if we look back in the last 14 years, nearly 50% of the time, all the asset classes, equity, debt, gold, even commodities have been given a positive returns together. That's the powerful thing I want to say. So it means, see, the a well-structured portfolio doesn't depend on a kind of single one. It grows steadily year after year. This is exactly what NIO is designed to do, which captures the performance by letting multiple assets to work for you at once, right? So, and finally, resilience. The market teaches humility. See, the winner of today can become a lagger tomorrow, and underperformance can bounce back stronger. That's why at NIO, we don't chase trends. We stay invested, stay disciplined, and stay diversified. Over time, this balance between conviction and patience is what turns ordinary investing into a lasting wealth creation. So remember, in the world where the markets are unpredictable, discipline, diversification, and resilience are the only constants. So that's exactly what NIO helps you to build. Okay, when it comes to investing, the risk position defines how your portfolio behaves in different market conditions. At NIO, we operate in a moderate to slight conservative zone. Sweet spot, I think it's a sweet spot where your capital is protected but still positioned for a meaningful long-term growth. Our approach is not about taking aggressive bets or chasing short-term spikes. Instead, we focus on consistency, balanced risk across equities, debt, gold, and other global exposure. This helps to smooth out return while keeping your portfolio resilient even in the volatile market. Our return expectation, you should have something like inflation plus 5 to 7%. That would be good. So, which means your wealth doesn't grow like nominally, it grows in the real terms. So NIO's philosophy is simple. Take measured risk for meaningful reward. That's how we ensure your portfolio works for you, not just in a bull market, but across all the cycles. So, as we come to the end of today's session, let's talk about why truly NIO is a kind of it's a set apart strategy. The NIO promise is what you see because it's at its heart, NIO isn't just an investment product. It's a long-term partnership designed to help NRIs to build, protect, and grow their wealth because every market cycle. NIO starts by focusing on wealth creation through disciplined exposure to assets that offer a consistent growth. We identify opportunities in equity, as I stated earlier, in domestic, global. Ensure your money is always working efficiently. This is where the journey begins by building a foundation of strength and growth. But growth alone isn't enough, I would say. Wealth must also be preserved. That's why new kind of dynamically shift across asset classes, as I said, debt, equity, even foreign to maintain that balance. This diversification ensures your portfolio is kind of all-weather investment stuff. So finally, sustainable wealth, that's the most critical part. Through intelligent allocation and disciplined review, NEO helps your portfolio to adapt this change in global and domestic conditions. The goal is not just about your wealth, it's also how you endure securely, smoothly, and confidently. That's very important. So whether you're looking to create, preserve, or sustain the wealth, the NEO is designed all the uh, kind of seamlessly towards to protecting you. It's not just about portfolio, it's a promise, I would say, to make your wealth as a global, resilient, and a forward-looking as you are. So yeah, here are stuff. So as new is a PMS, as per SEBI's guideline, we need at least 50 lakhs to start your new portfolio. So we have considered NSE multi-asset index one as our benchmark. So it will invest around 50% to equities, 40% to arbitrage, and 10% to REITs and invest. So we don't charge any exit load. So our fees is 1.5% of the AUM, where it's charged in a quarterly basis on daily NAV. So it's so as I stated earlier, the asset allocation, we don't have any particular kind of gap. So a kind of limit in any one asset class. If you see any kind of multi-asset mutual fund and all, there will be some gap. You should have at least 5% in this particular asset class and something like that. But in new, we don't have anything. We can go from 0 to 100 in equity, we can go 0 to 100 in debt, we can go 0 to 100 in any asset class. So also we don't exceed 25% of the particular stock in your portfolio at any point in time. So you can see how we performed in the September month. So in long term, you can see we made in 2 years 25% above CAGR. Since inception, we are more than around 25% CAGR. So I think we delivered a good return. So yes, that's it. We will end today's webinar. We are happy to take the Q&A.